Hello and welcome to today's virtual coffee talk webinar. My name is Margaret and I will be the web host for today. We have a few housekeeping announcements and then we will intro our speakers and get started. In order to earn CBE credit for today's session, please stay connected to the webcast for the entire program and participate by responding to at least 3 of the 4 poll questions. Second, there will be a course evaluation which will open in a new window upon exiting the webcast at the end of the broadcast. With that, I'll introduce our speakers. Kevin Jacobs is a managing director with Alvarez & Marsal Tax in Washington, D.C., and the National Tax Office practice leader. He brings more than 15 years of experience in tax matters in both the public and private sectors. Bill Seaway is a senior advisor in the National Tax Office of Alvarez & Marsal and is located in the San Francisco area. He has over 34 years of M&A and bankruptcy experience. Pete Lowy is a partner with Nelson Mullins Riley and Scarborough LLP in Houston. He is best known for his tax controversy work and deep experience in the energy sector. And finally, Nate Jones is a lead product manager with Wolters Kluwer Tax and Accounting. He will be showing us how to find additional answers and resources using CCH Answer Connect. All right, thank you all. Kevin, you can take it away.
Great, thanks so much. And thanks everyone for joining us. Today we're going to talk about Loper Bright, which is a Supreme Court decision that recently came out. But before we do that, we need to sort of go back in our time machine not too long ago and say what happened beforehand and focusing on what's referred to as Chevron deference. From there, we're going to then talk about Loper Bright, discuss then the implications that it has on tax regulations and compliance, and then also tax controversy. Ultimately, the key takeaway is going to be the world as we knew it from a tax return to a tax planning to a tax controversy perspective has been turned on its head. Like most of the Supreme Court cases that have come out, you may not necessarily know how far it's going to go, and this panel is going to talk about some of those questions, but stay tuned. And then at the end, we're going to hear from Nate about CCH Answer Connect. I do want to briefly mention that our next virtual coffee talk is scheduled. It's October 16th at 1 p.m. Eastern. We're going to be talking about the upcoming election and what we should know. So stay tuned for that. With that, Bill, what should we know about the Chevron deference?
Chevron deference was a very powerful deference to agency authority. Chevron was a case that originated in 1984. Well, it was heard by the Supreme Court and issued in 1984. It involved an environmental regulation that the Reagan administration wanted to loosen, and they did. They published guidance. Interestingly, one of our Supreme Court justices, his mother was the head of the EPA at the time. She loosened the environmental regulation. Some conservation groups took the EPA to court, and it made its way up to the Supreme Court, where the Supreme Court basically said, look, it's up to the agency to make these tough decisions about how to interpret regulations, and unless the agency is, being arbitrary or capricious or something like that, we're not going to get involved. Now, what the court did note in 1984, and we're going to get into this, start dissecting this little nuance throughout the rest of this next hour, is that where there's an express delegation of authority in a statute to an agency to write regulations, the Supreme Court said then a court should only overturn that regulation if it's arbitrary, capricious, or manifestly contrary to the statute. However, where there is no express delegation to the agency to address the issue, instead there's just an implicit grant, then the court should use a standard of whether the regulation is a reasonable interpretation of the statute. Pete, I think over the years, those two standards, the arbitrary, capricious, when there is an explicit grant, and the standard of the implicit grant of a reasonable interpretation, the court seemed to just kind of merge those two together and use them interchangeably. Is that something you've noticed also?
Yeah, I would generally agree with that. I think sometimes judges, they know what result they would like to reach in a case if the law will allow them, and those two standards, there's not a whole lot of difference in terms of the amount of actual constraint it places on a judge. So I think as a practical matter, I would say that's generally accurate.
Yeah, and as we discussed, this Chevron case was not a tax case, but it had implications for all administrative law under federal law, dealing with all the regulations from all the different agencies. Unclear to many tax practitioners is what we should do or what we should have done for tax regulations after Chevron. Now, I think most people believe that after Chevron, that if there was a specific grant of authority, then you would apply the Chevron deference. But if there was not a specific grant of authority, no one was quite sure what to do. Did Chevron apply, or did some of our pre-Chevron Supreme Court cases continue to apply? What happened up until 2011 is the courts went back and forth, different courts sometimes applying Chevron deference to all regulations, other courts applying what was known as the national muffler standard to regulations that were implicit regulations. Finally, in 2011, the Supreme Court weighed in to settle this issue. And there's two important rulings here in this Mayo Foundation case from 2011. The first one was that Chevron deference was to be accorded all tax regulations, whether they were legislative regulations or whether they were interpretive regulations. The court said it doesn't matter. They're both entitled to Chevron deference. And it also said, look, tax regulations should not be subject to a separate rule for determining deference from the rest of federal administrative law. Tax regulations get the same rules as all other federal administrative rules. And this distinction becomes important as we try to figure out what's going to happen going forward. For those of you who don't remember, interpretive regulations are issued by Treasury under what's called Section 7805A, which provides that the Secretary shall prescribe all needful rules and regulations for the enforcement of the Internal Revenue Code. When Treasury doesn't have a specific grant of authority, say Section 1001A, to issue regulations, they'll put out regulations dealing with 1001A issues under 7805. They'll cite it as why they're able to issue a reg, and that is generally considered an interpretive regulation. Versus what we oftentimes see when we look at code sections, where there's a specific grant at the end of a code section, or a specific grant of a code section. Take, for example, 1502, where basically the statute says, Treasury, you write consolidated return rules. We Congress want no part of it. You will allow people to file consolidated returns, and you write the rules as needed. That's a very big legislative grant of authority in 1502 to write what you want.
So we're going to launch our first polling question now of, were you surprised by the decision to overturn Chevron? As noted, make sure that you answer the survey and polling question in order to receive CPE credit. While they're answering, I did want to note two different things. Bill, your summary regarding interpretive and legislative is how we're interpreting it, right? And there are some people that have suggested that any regulation that's issued under 7805 may actually be treated as a legislative grant. And so therefore, there's no such thing as an interpretive regulation in the tax code because everything is under 7805. This is something obviously we're looking at. When I was in the IRS, we always asked these questions as far as what is our authority? Is there a specific grant or a general grant within the section, or is it under the broader 7805? You are pointing to authority, and if you're pointing to authority, then that suggests that it may not be interpretive. So that's one of the things we'll have to look at. And, as Pete noted and Bill noted earlier, there was this whole express delegation, arbitrary capricious, and the reasonable interpretation, and the standards really blend together. And it's a fascinating thing because when you sit back and you say, we're here just talking about the level of deference that needs to be given to an agency interpretation. And what does that mean? What does that do if we say, okay, well, courts are going to come to the answer that they want anyway? And so clearly, some courts must have felt constrained to come into an answer that they didn't want. Otherwise, the deference question wouldn't have been as prevalent as we're talking about. But obviously, it does impact us on the planning side and the tax return side. And so there's a lot of interesting things to unpack and see how it just really applies. But why don't we go into Loper Bright?
And before we do, I want to comment on the polling question. When I listened to oral arguments from Loper, I was convinced they were going to overturn it. I came away just going, no, this is Chevron's dead. I felt like Cassandra because no one was listening. I was hitting the panic button early, but anyway, got to be right once in my life.
Yeah.
So,
and Bill and Kevin, just the just this discussion about distinction between legislative regulations, interpretive regulations, it's kind of deja vu all over again, because after Mayo, that seemed kind of academic, but that is being, that distinction is being reinstituted now. Sorry,
great point. It really is a great point because, and I was going to say that about Loper Bright and Chevron. What Loper Bright did was take the Chevron standard, which, as I said, was tremendous amount of deference to the agency. For a taxpayer to win and overturn regulations under Chevron was an incredibly heavy lift. We'll talk about that in a couple of slides. But getting rid of it has just made all of this so difficult now. You have to go back and look at every grant of authority and try to parse it, and we'll come to that. Anyway, so what the Supreme Court said in their very long opinion on Loper Bright was that Chevron cannot be reconciled with the APA, that the courts exercise independent judgment, that it deferred too much to the executive branch. In fact, there should be almost no deference. What the court said is that what should happen is a court should read a statute, determine the best reading of the statute. Each judge should come to their independent view of what the best reading of a statute is. And then to give some amount of respect and deference to the fact that the agency put the time into writing regulations and to read it and to give it meaningful thought, whether the court thinks that is the best interpretation. And if the court thinks there's a better interpretation, the court should go with it. This kind of makes my head spin because, there's 20 tax court judges, there's almost 800 Article 3 judges, and they're all supposed to come to their own independent view of what is the best interpretation of a regulation, of a statute, best interpretation of a statute, and then try to compare it to a reg. It just kind of makes my head spin.
So Bill, for what it's worth, this principle alone, that the best interpretation of the statute should prevail, is at least maybe somewhat intuitive. We all know close may count in horseshoes and hand grenades, but should it really apply in statutory construction? Maybe not. And so here we're talking about, close probably isn't good enough in the case of an agency's interpretation of a statute.
And it's going to be really interesting to see, and I know we'll get to this at the end on tax controversy, but like if a taxpayer wants to challenge, are we thinking they're going to go to district court or are we thinking they're going to go to tax court? And that's going to be really relevant because of the level of deference that the courts give, right? A district court may not give deference to a district court in another circuit, but in tax court, even if it's a totally different circuit, if there's nothing on there, they still give deference to tax court opinions. So it's really going to be an interesting play to sort of see how things play out. And so, Pete, if you want to, chime in now, or we can hold it till the end just to sort of see if you think like one side of the court versus another is going to be seeing more of these challenges, as Bill noted.
Yes, I'll at least start to address it now. So I don't think there's any single rule that will apply here, but at least some observations. So I think judges that are more comfortable with the tax code and that they can make a decision, they can interpret one piece of the tax code without messing up the whole tax system. I think those are the types of judges that, certainly in a deference world, may be more amenable to kind of giving an even playing field to the taxpayer and the government. And that may suggest the tax court could be a good place for challenges to regulations, where most of the tax court judges, a lot of them even have experience writing regulations. They understand the reg process. They understand how all the pieces to the code fit together. And I think there's more of a comfort level that they can make decisions without concern about the knock-on effect for other aspects of the tax code that maybe a generalist judge would be worried they can't anticipate.
Interesting. I would like to make the comment, right, that we're hearing a lot of noise in the tax system about Loper. And there seems to be like two camps, but there's always been two camps in tax, right? There are the people who say, I don't care what rules you create. What I want is certainty. I want to know the answer to a question. I want certainty. Put forth whatever rules you want. I'll deal with them. And then there's the people who say, I don't want any rules. I want chaos, because in a chaotic system, I can do what I want. And then I have to wait for the IRS to challenge me. And I'm not necessarily wrong. It's just maybe a different perspective. And there's two camps. And I'll tell you, the camp I've lived in is just give me the rules. I'll deal with it. I just want to know I have the right answer. For my friends who are in the other camp, they're excited. They are talking about let anarchy rule. This is going to be great. We're gonna just do whatever the heck we want, because there are all the regulations are just the IRS's viewpoint, which is a bit of a stretch. I don't think you can go that far, but there's some real excitement on that side.
Yeah, Bill, I suppose chaos for a tax planner is gainful employment for us tax litigators.
Yes, I was going to say, Pete, you litigators are really the winners of all of this more than anybody. So the Loper Bright distinction. So what did Loper Bright say? Loper Bright came in and said, listen, in what we think might be dicta, not clear, but might be dicta, they said, look, if there's an express grant of statutory authority, then the best reading of the statute might be that, well, the agency was supposed to write this rule or define this term or whatever it is. And then the role of the judiciary at that point is just to make sure that the agency stayed within its grant, that the grant was reasonable, not arbitrary and capricious. So similar to like a Chevron thing. But when there is not a grant, then the court seemed to be, because they didn't say it explicitly, pointing to Skidmore. And I say they seem to be pointing to Skidmore because they cited it 6 times in the body of the case that I counted in the main case, not including the dissents and Judge Thomas's concurrent opinion. They mentioned it 6 times, but they never explicitly said that's what they wanted to use. And that's part of my problem with Loper, is it's a long opinion where they keep kind of beating the same dead horse over and over again, how it's the judiciary's job to interpret statute, not the executive's job to interpret statutes. They keep beating that without really giving us much guidance on how they want us to do this. Sorry.
Yeah. So Bill, I guess just another way to look at it. So I think what's clear is the Supreme Court, they overruled the Chevron and the Chevron framework. They replaced it with a new Loper Bright framework that they believe better tracks the Administrative Procedures Act. The details, though, there's still a lot of unanswered questions and a lot of that to be worked out, probably first in the lower courts and bubbling up. And so, in that respect, it may feel kind of incomplete and a lot of blanks left by the Supreme Court that may have been intentional, though.
I just don't know, Pete, if I would classify Loper Bright as a framework. I mean, I would agree that they overturned Chevron. Chevron had a framework. Here, we're debating what did Loper Bright do. So I don't even know if we have the guardrails for the framework to be filled in, because we're debating, does it or doesn't it matter if it is a legislative or interpretive? We're not even getting to level of deference. They're just saying, well, in some cases, decide this. So I have problems even classifying Loper Bright as saying we're getting a framework. I think Loper Bright was a grenade or something else that pretty much blew up what we knew. And now we're starting from scratch. And I think it's going to take another, bunch of cases to percolate up in order for then the Supreme Court to create a framework like Chevron. And I'm not saying it's going to be Chevron, but I'm saying at least people understood what the framework was. And maybe you're seeing things differently, but I'm having a hard time with putting my planning hat on and also even my former litigative hat on, just wrapping my hands around what it does.
Yeah, so I think a lot of this will kind of be worked out as cases interpret Loper Bright, but at least some possible guardrails are if it's an interpretive regulations, if it's an interpretation, we're down the path of no deference or Skidmore deference, if you consider that any deference at all, but that's the path you're on. Whereas if it's legislative, if it's pursuant to an express grant of authority, allowing to like fill gaps in the statute, then you're in this, reasonable decision making kind of path. So that's at least one possible way that Loper Bright kind of serves as a traffic cop between basically no deference and they don't use the word deference, but a different kind of approach to evaluating the agency action if there is an express grant of authority.
Which takes us into, well, how is this going to affect tax, right? And we started to talk about it here, but this is where, it gets really, at least for me, confusing, and it's going to be an interesting, what is it going to be, Pete, a decade before I have clear answers from the Supreme Court on this? How long is it going to take if a case is percolating in tax court right now, and some poor tax court judge has to decide what they're going to do with an interpretive reg? How long is it before I should expect the Supreme Court, if they take it up, to hear it? What is it, a 7-10 year path? Got to be something like that.
Yeah. Well, Chevron took decades to really kind of develop into steps 0 to 2, or and kind of flesh a lot of that out. And there's still a lot of nuances to it. We can expect it'll be a long journey. I think within the next few years we should get a lot more than we have now, because first of all, Loper Bright gets remanded to 2 separate appellate courts, I believe the First and the DC Circuit. And so those courts will presumably within about a year, maybe a lot sooner than that, at least apply their interpretation of Loper Bright. That could go back to the Supreme Court. And then there are a lot of cases just percolating lower down that are where this issue is being teed up. And so there probably will be a lot of activity. Where Chevron, when it started out, in Loper Bright, the court mentioned that they didn't view this as a watershed case when it was first issued, and it just became that. I think Loper Bright maybe is seen as a watershed case and will be given the maybe earlier attention than Chevron was.
I think we're going to get some early decisions, though the 3 we have you're going to talk about later, they're not really that helpful. But I think we'll get some early decisions. My expectation is we're going to have a very split approach between all these judges, because, as Kevin said, Loper didn't give judges much in the way of guidance on what to do, particularly with tax regulations, right? And we're going to hit that now. Like, what about tax regulations? So, is there a distinction between interpretive and legislative regulations? As Kevin pointed out, 7805 provides all needful rules and regulations, a grant to the Treasury to write all needful rules and regulations. But that's a very general grant. It's not a very specific grant. Versus, under a statutory grant of authority, where you can prescribe such regulations as may be necessary or appropriate to carry out the provisions of a particular section, which is where I think there's going to be first off, there's a lot of fights to be fought. But one of the really big ones that we all are going to be involved in, and the courts, is looking at statutes, looking for grants of authority, and trying to figure out what that grant of authority means. For example, in what Kevin has in front of us here, where we say in that 3rd bullet point, the 2nd indented bullet point, we have prescribed such regulations as may be necessary or appropriate to carry out the purposes of a section. But some places it doesn't use the word purposes. Some places it uses to carry out the provisions of this section. And we've sat around, I don't know about you people, we've been sitting around on our side with a lot of code sections where it's very relevant, not just doing this because it's fun. We're trying to figure out, well, it says provisions of a section. Is that different than purpose? Is purpose a broader grant than provisions? Feels like provisions wants them to stay within the literal words of the statute, but then write regs. Whereas purposes says you can look more to what we were trying to do and maybe didn't do very well. That's just only one way of maybe trying to interpret. So we think, or at least I think, there's going to be a ton of action and ton of debate by people looking at these grants of authority that are in the various code sections and trying to figure out what the heck does it give Treasury the ability to do. I was looking at 482 yesterday. Sorry.
And you're assuming you can determine the purpose, right? Because then it's like, well, what happens? How are you doing that? Are you looking to legislative history? And what happens if there is no legislative history? Does that mean that there is no grant, even though there is a grant? Right?
No.
How do you, is it the agency's determination of what the purpose is, or does that now go to the court's determination of first, what is the purpose of the section, to then determine if you're within the grant? Sorry, Pete.
Yeah, well, that's a good question, Kevin. So so under Loper Bright, I think it's clear the courts can interpret the boundaries of that grant, but then within those boundaries, then how does it really work in detail, including look into some of the principles that you're talking about, Kevin. So Bill, just to maybe add or highlight some of the important points that you made there. There are a range of different grants of authority in the Internal Revenue Code and outside, and there are many different variations. I mean, some of them are worded even just a little differently, and so so there will be a challenge, I think, of extrapolating a decision in one case under one grant of authority to another case with even just kind of a nuanced wording of a statutory authority. Because in general, you would think Congress made some deliberate decision on wording it this way rather than that way. So, here you have the examples of 7805. These are all needful rules for the enforcement of the tax law. That may be very different than prescribing all needful rule to carry out the purpose of a statute. And there are other grants of authority in Internal Revenue Code that are even more pointed at giving the Secretary authority to basically legislate in some specific area, like 1502 and the consolidated regs.
I agree, and I've seen a tremendous amount of discussion among not just within our firm, but when our firm is talking to other Big Four firms or the law firms. Tremendous amount of focus here by people trying to parse what these grants say. I was in the 482 statute the other day and trying to figure out if there's a grant there, and if it is, what is it? And just the beginning of 482, and is it a grant? I don't know. I keep switching my mind if there's a grant there. I used to think there was, and then last time I read it, I'm like, I don't really see the grant anymore. It seems to be disappearing on me. It's going to be so interesting. Chevron was so easy. If it's a tax reg and it was validly, enacted, then that's the end of it. You're not going to probably beat it. It's going to be very difficult for a taxpayer to get the reg overturned because it has to be arbitrary and capricious, and that's a pretty high bar. But without the grant of authority, I don't know where we're going to go. That's where I see it between the firms, the law firms, the people who are at companies. Kevin, we can go back to swimmer side. I hope we have time. I'll cover this point I wanted to cover on that previous slide. I think for judges, the more interesting question is how are they going to deal with Mayo Foundation, and Mayo's statement that tax is not special, right, and should be subject to the same administrative rules as the rest of the law. That is not the way it used to be prior to Chevron. Prior to Chevron, tax had very special rules which gave a high level of deference to all tax regulations, irrespective. Right? The courts did not want to weigh in. They stayed out. They said, look, there are millions of taxpayers, all with different facts. Treasury has to figure out how to split these babies. We're not going to second guess them. They do their best, and they gave just a tremendous amount of deference to the regulations. I'm thinking of the old Carell case from 1979. Where the courts just said there's just too many taxpayers with different facts. We're not going to get in on this. If you follow Loper Bright, and Loper Bright leaves in place Mayo, tax is not supposed to be special, and we're going to have the same rules as everyone else. And so for judges, this is the first question they have to come across. Are they going to try to go back to, the Vogel case, the National Muffler case, and the Rowan case? I don't think they can, because Mayo is still out there, and it said those cases are dead. I don't know if you have thought on that.
Yes. So Bill, I think under Loper Bright, we're in a bit of a clean slate where there's maybe limited value on some of these older cases. But that said, I mean, we may be able to mine some of these cases for teachings. Like you have Rowan out there. They do at least address a view of a perspective on what 7805 means. They do distinguish it from specific grants of authority, like they cite, I think, Portland Cement, where involving the depletion regs, and there's a very specific grant of authority there. And so there may be some learnings from those earlier cases, even though I think we are in kind of a clean slate at this point.
Right. It is interesting, right, that they just on the clean slate, it's interesting that you say that because on the one hand, we're clean slate from a deference standpoint, but they went out of their way to say we're not overturning all of the previously decided cases, right? So on the one hand, it's a clean slate. It's on another hand, we're not. And so what does that even mean in the sense of from a precedential value, if we had cases that relied on the old cases to determine regulations are valid, are those regulations still valid? Well, the court has said we're not sort of overturning those decisions, even though it may actually have failed under the Loper Bright framework. And so now that carries over. And so it becomes really, really interesting. And just harking back to what Bill said with everyone's, I want to say millions of judges, but there's going to be millions of opinions. And the reason why is if I think of like the purposes of a section, well, if Bill and I engage in a transaction and there's slight tinkering, right? Just because we both fall under a regulation, one of our transactions and the regulation may actually capture it correctly, the other one may not. And so it might actually be an interesting thing as far as they're saying, oh, okay, well, you wrote the regulation too broad because you're supposed to capture one of the transactions but not the other. So even if we have case law now under this Loper Bright type standard that says, oh, the regulation is valid, it's no longer the case where you're saying, okay, we have a court case that says the regulation is valid. The regulation is valid. You have to then see, well, what did they do? What was the level of deference they said, and how did they analyze it? Because it might be, you're going to have to go into micro level of analysis of, well, if I'm in this fact pattern, then, okay, I now have a decision. But if I'm in anything different than that fact pattern, you can possibly make an argument that the case is totally irrelevant. Similar to what people do on like rev rules, for example. If you're not on the four corners, then it just doesn't apply.
Kevin, great. I guess there are several points in there. Great points. Let me just add on this precedent. This concern maybe about opening the floodgates for revisiting all of the decisions that have upheld regulations. So the Supreme Court in Loper Bright did anticipate that concern, at least to some extent, and they at least try to quell those concerns with the principle of stare decisis. Now that's only really a partial solution because if you don't have a Supreme Court case, and in our take in the 482 context, back to the 482 context, you've got Altura where the Ninth Circuit decided under Chevron, whether or not you upheld a regulation that included, I think, stock-based compensation in a cost-sharing arrangement, and that's under Chevron. So, is there, to what extent does stare decisis and precedent come into play? Well, taxpayers could take the case to a different circuit that would apply Loper Bright, would not be applying Chevron. If they get a split in circuits and they get to the Supreme Court's not applying Chevron either. So even that Ninth Circuit decision from a precedent stare decisis standpoint, it really has limited utility only to taxpayers in the Ninth Circuit. And that's going to apply with the tax court as well. So if the tax court interpreted a reg one way, it gets appealed to the Ninth Circuit. Ninth Circuit reverses under Chevron. Tax court probably not going to feel constrained by that Ninth Circuit decision. Maybe even under the rule of Golson, they would feel bound by cases appealable to the Ninth Circuit, but they wouldn't for other circuits. And so in cases appealable to other circuits, they're under the Loper Bright framework, and I think they can look at things differently than the Ninth Circuit had.
Great. And we're launching the next polling question as to whether or not Loper Bright will impact you. And while they're answering, Bill, if you wanted to go through the slide that we had as far as the potential responses to Loper Bright from from taxpayers all the way to Congress.
Yeah, well, for taxpayers, we've already seen, Kevin, a number of situations where we have been in meetings and all of a sudden someone said, it's only a reg. Let's just take a different position. And you and I, our jaw dropped, right? Because it's 35 years of, you don't really challenge regs very often. That's really rare. And now it's like, just interpret reg. Let's just say no. See what they can do with it.
Bill, I wonder if that reflects, and I don't. So since Loper Bright was issued, and this is probably maybe the first takeaway from this panel discussion. When it was first issued, I did hear practitioners, I think, operating under the belief that, hey, now you can present any reg to a court, and they're just going to apply the best interpretation standard, and that's it. And and that would be that would be very simple to administer. At least for those of us who represent taxpayers, we probably like that rule. I hate to be the bearer of bad news, but that's not the rule. It's much more nuanced than that, and there really is a framework to follow, and just, yeah, and you have to work. You definitely have to work through that framework before you start concluding that you can just ignore a regulation.
And the other thing, right, is Kevin, is you'll be quick to point out, maybe it's a later slide of yours you're pointing out, I don't remember, but to be able to even challenge a regulation and take a position against a regulation, you have to comply with a couple of different things. I think you're going to cover that later, right? There's a lot to unpack there. Just don't go running off, go against a regulation. I would exercise caution. I feel sorry for the courts, by the way. Again, I feel that the courts who have to, if you're a district court or a tax court judge and you've got to try to figure out what I'm going to do now with regulations and how I'm going to apply Skidmore deference. My experience is that Skidmore deference meant almost nothing. The number of cases I have seen where the tax court went and looked at a revenue ruling that the IRS was holding up, and the IRS held up a rev rule. See, there's a rev rule right on point. And a rev rule is entitled to, when it's in the hands of the IRS, Skidmore deference. And the courts just went, yeah, it's Skidmore deference. That's your opinion. We read it. It's nice, but we don't agree. And that's about how much deference they gave it. That's not much deference, Pete.
Yeah, I mean, and as noted here, I mean, it's going to be interesting to see, Treasury and the IRS, their response. We've now had our first official Treasury package or significant package drop post Loper Bright, which is the 600 plus page thrilling novel of the CAMT proposed regulations. If you have insomnia, this will help. But it is really interesting just to see how the preambles are going to continue to shift and what they're going to actually do. Whether, obviously the proposed regs were very far along before Loper dropped, but it'll be interesting to see how the preambles potentially evolve over time, and then obviously Congress and their authority. But in the interest of time, let's sort of jump to compliance practices, and this was what Bill was suggesting. And when thinking of compliance, you have this question as to how do I prepare my tax return? What do I do? It's not enough to just say, hey, by the way, I don't like this regulation, I'm going to challenge it, right? I mean, there's actually the Tax Anti-Injunction Act. You need to be harmed. There needs to be determinations. There's a lot of hoops that you need to jump through, generally applicable. Just to note, there's different rules that are in bankruptcy as to the inapplicability of that. But you're able to sort of look at it and say, okay, I want to take a tax return filing position. What do I need to do? Well, as you can see on the screen, there's an 8275R. It's a form that you actually are disclosing that I am taking a position contrary to a regulation. Now, it's really interesting from an enforcement standpoint. Historically, 8275Rs have been attached, and many people in the tax community have said it hasn't really done much. It hasn't raised the red flag from an audit perspective. Again, not trying to give advice, not trying to suggest, oh, these are willy-nilly, you should do it, without any thought. However, it will be interesting post Loper Bright, the number of 8275Rs that are filed, and whether or not the IRS then has something in their mechanics to say, hey, by the way, this is now a red flag for us. And you really need to think about it, right? Because you're in essence saying, we are taking a position contrary, you are flagging to them that you're doing so, and you're really trying to demonstrate and document your position up front.
And importantly, Kevin, on this slide, you point out that you have to have a reasonable basis for your challenge, right? You have to have it grounded in something. It can't just be, well, I don't like the result. It can't be frivolous, right? You have to have a reasonable basis, which means you're going to go through, like you do with substantial authority. You're going to go through the authorities listed in 6662-4. You can decide if you have one. The regulations lay out what you need to do to reach that reasonable basis standard, or else you're subject to penalties if you challenge the reg and you don't have a reasonable basis.
But again, it's a fascinating thing because we have the regulations. And funny, Bill, you say regulations. And so immediately I'm thinking, well, do we Loper Bright those as well, right? And so you now start saying, okay, I now have a reasonable basis. Who knows what reasonable basis is? Because the IRS's view is now just the IRS's view. If I'm taking the view that the regulation does not apply or is invalid under Loper Bright, then I have to start thinking about, well, does that, if I take that view, am I taking a reasonable basis for that view, or am I taking a reasonable basis for the position that I'm taking, or is it a cumulative reasonable basis, right? There's several different decision points that I have to do as I'm doing my interpretation. The IRS had their interpretation. Is my position reasonable irrespective of theirs? Well, if they don't get deference, both might be reasonable. So there is this really interesting dynamic as far as how do you determine this? And several people have said, oh, well, you look at each individual determination or fork in the road and you say, okay, I take the lowest determination. Other people say, well, it's a cumulative determination, and every time that you're smaller, right, it further reduces your likelihood. And so it's going to be a fascinating determination. And this is just another area where we're going to continue to see things. And it really plays out, like even on the tax planning, right? When I want to start thinking of structuring a transaction, what do I want to end up doing? How do I want to end up applying these rules? I mean, in the normal M&A context, there's so many rules that are just in the regulations. And people do shorthand. What does it mean to be substantially all? We have court cases, and they've regified some of the court cases, right, in continuity of interest and continuity of business enterprise, but maybe they fall. There's a lot of interesting dynamics here, and really, every step of the way, people are going to need to know and think about what's going on, and it's going to require greater interaction with all of the practitioners, right? Because your planners are going to need to be, hand in hand with the tax return preparers, and then also if you have financial statement auditors, they're going to have to determine, okay, what's the level of comfort that you have there in determining whether or not you have to put a reserve or a disclosure or a footnote. So there's a lot of interplay here. And, as we've said, it's going to be quite a few years until we really know. And I think even, at least right now, even if we know or we have a decision on some things, it may be the arguments that we had. And it's similar to when we had the discussions of, in Moore, what is dicta? And we're going to be having those conversations on those cases too. And determining what, yeah, go ahead, Pete.
Yeah, so Kevin, so I guess there are two things here in the planning space. Number one is the circumstance under which you may want to take a position that's contrary to a reg, but how about what's your view on whether or not taxpayers can still be comfortable that if they want to be safe, they can still follow regs and they're safe?
Yeah, that's right.
Yeah, go ahead, Bill.
I was going to say, well, my view is, the courts have always held the IRS's feet to the fire on revenue rulings, right? An IRS cannot litigate against their own revenue rulings in tax court. The tax court will have none of it. And in my view is if they won't let the IRS litigate against their own, take a position against their own revenue rulings, they're not going to let them take a position against their regulations. Pete and Kevin, what are your thoughts on that?
No, I agree, but I was even going to take it one step further. And what comes to mind, Pete, is the 385 regulations. And I know that everyone loves them, but I'm actually going to point out the 385 documentation regulations, which, actually got revoked. Notwithstanding the fact that they're revoked, right? People still use that as a safe harbor to say, okay, if I satisfy these regulations, I should be good from the IRS's perspective. Because when they revoked them, they didn't revoke them saying it was wrong, right? And so this was the IRS's view on things, and the IRS has espoused a view on a regulation. So even if I had a court case that ultimately says, okay, these regs are invalid, it's still a potential interpretation, right? And so maybe the taxpayer's interpretation will be there. Maybe the IRS won't challenge it, even if there's no reg, because they thought it was the better interpretation. It is going to be sort of interesting just to see how this all plays out. And I will say, just going back to the tax return filing position, many places are saying, well, we might be willing to do this, but you actually have to tell us you're going to call up Pete or someone else and be willing to go to the mat and challenge the regulation. Because just merely saying the reg is invalid may not be enough. You actually have to commit to saying we're going to challenge the regulation. In the interest of time and making sure Pete has time to share all his tax controversy nuggets, let's launch the polling question of how frequently do you think courts will overturn tax regs? And with that, Pete, why don't you start going through the tax controversy section?
Sure. So we've actually covered a lot of it. What should I wait till? Okay, I'll start with we were just talking about taxpayers being able to rely on regs. So even before you get to the controversy area, Treasury has periodically and quite recently, issued its policy statement that the government will not litigate against the position they take in a regulation or even in sub-regulatory guidance that's issued to the public. So I think taxpayers can get some comfort out of that. And then also as a practical matter, issues will typically go through audit before they wind up in the courts. And on audit, IRS auditors will, at least currently, do not have authority to go against a regulation. So you can expect they'll also be following the regulation, whether the regulation is ultimately valid or not. So all
my
that
experience is that we keep having to remind them of that rule.
Yeah. So that's at least one of the points. Let's see. So the first bullet, how much time do we have? We've got a bunch of time. Okay. The first bullet about does Loper Bright even the playing field? Well, a lot of the details of this new framework need to be fleshed out. But at least if you've got an interpretive regulation and an interpretation of a statute at issue, the answer seems to be yes. That you're basically under a no deference Skidmore type of scenario. If you do have an express delegation and something's more on the legislative reg side, we're in this brave new world, and we'll kind of still have to see how things shake out.
I realize it's dicta in Loper, Pete, but the court did say, when there's an express delegation, as long as the agency stays within its supposed, delegated authority, so it stays within the framework that it was delegated, supposedly they're supposed to give a high level of deference.
Yeah, and again, I think they're setting out a framework that at least better tracks the APA, and you get more into that reasoned decision making. This may kind of blur into, there may be a procedural challenge, but substantively, it's going to be harder to challenge if the court does interpret, the delegation of authority of providing, authority to Treasury to issue a legislative regulation.
Right. We're not covering State Farm today, but that is another area that's always interesting, right? The issue of whether the reg was properly issued under the APA and the State Farm analysis.
Exactly. Okay. Potential knock-on effect for related doctrines. So first of all, I'll just mention, states typically have an Administrative Procedures Act. They often track the federal one. States often also have their version of the Chevron doctrine, and so we may see a knock-on effect in the states of they're developing frameworks that more match their Administrative Procedures Act. Okay, Seminole Rock doctrine. So this is the principle that courts will often defer to agencies' interpretation of their own regulations. And under the reasoning in Loper Bright, this looks vulnerable. The same, basically in Loper Bright, the court looked at the APA language that the courts interpret the law, and that was the principal basis on which Chevron doesn't survive. Well, that same language, in interpretation of law, it expressly includes agency actions. So it certainly looks like Seminole Rock will suffer the same fate as Chevron, but but that remains to be seen.
Interesting point, Pete, that just kind of flashed in my mind. If my memory is right, during the oral arguments, there was some discussion about whether they were going to Seminole Rock Chevron, something like that, and what they were going to do, and it never made its way into the opinion. It was just a kind of a question among the justices themselves whether they should quote Seminole Rock the Chevron. It was a very interesting analysis. They didn't touch it.
Yeah.
Yeah,
I think there are a lot of issues they didn't touch, and they kind of kept it. The issue actually presented to the court, or the issue that they accepted for review, was very narrow, just whether Chevron applies, and so that kind of left them with some latitude to not really articulate a whole lot about what replaces Chevron if after it's overruled, or go into any other areas like Seminole Rock.
So Pete, we have about 2 minutes before Nate's going to show us Answer Connect. And so what should we know about these initial tax court responses? And obviously, as Bill noted on the next slide, there's a host of cases that might also raise this. But what should we know from these?
Yeah, so once Loper Bright was issued, the tax court and presumably and maybe some appellate courts have requested additional briefing. I think we can expect some cases to be remanded, maybe from appellate courts back to trial courts to apply Loper Bright. And at least very initially, so Varian's a good example. So Varian, Judge Toro, interpreted that the statute was clear, and so after supplemental briefing, didn't need to even reach the Loper Bright issue because he just relied on the statute. And I think we will see some courts being able to just sidestep Loper Bright based on a plain meaning interpretation of the statute. Other cases, courts will need to confront it, and it'll be interesting to see how things shake out.
If memory serves, in Varian, the judge even mentioned that what he was doing was essentially a Chevron step one. The statute's clear. I don't need to talk about regs. The statute tells me what to do, and I'm just going to follow the statute. And the taxpayer wins. I found that interesting. To harken back to an old case, an old 1984 case that's no longer relevant. Sorry. And then we have YA Global, Pete.
Yeah, I mean, I think in all of these cases, it will, it's giving the courts an opportunity to relook at statutory interpretation through a different lens, and whether or not the results will be different, really remains to be seen, and will depend on the case, and will depend, I think. What we haven't seen yet, but I expect we will soon, is courts really scrutinizing the delegations of authority and trying to figure out, what does this really mean? This hadn't really mattered before, and so a lot of courts just kind of glossed over it, but now it's really important, and courts will be called upon to interpret things like 7805.
Yeah. Anyway, but YA Global went the same way. Taxpayer in that case lost, but it was the judge ruling the same thing. I'm just relying on the statute. Statute's clear, and the IRS wins. That was a case of this. Don't need to look at the reg.
I think I think the key takeaway is going to be there's going to be a lot of developments, and this is going to be really interesting. But I guess
these two weren't helpful. These two weren't helpful to answering these questions.
No, but I guess Nate, now that I know that, I have no clue what lies in store. What should I know from an Answer Connect perspective as far as what should I be doing? Nate, you're muted.
Nate, can you
No.
please check your input for your audio? Click on mic and audio settings and ensure that you've got the defaults on.
I guess Pete, while Nate's trying to get his technology, is there any other tidbits you think that taxpayers should know about?
There's probably a lot. I guess trying to think of something to fit in kind of a 10-second blurb. You have a question in mind?
Well, I guess it's sort of interesting, as we noted, when you're thinking of these things, what documentation do you think taxpayers should be doing? Like, how should we be preparing for this?
Yeah, so first, from a legal research standpoint, and I think that's what we're segueing into, from a legal research standpoint, it's going to be really important to not only read the language of the delegation, but also look to see if there's any hint of the purpose behind the delegation, any legislative history, and also trying to look to analogous legislation, and hopefully, or at least one view could be, hopefully Congress will standardize their language, their wording of the delegations a little bit more, so that decisions that interpret one delegation can be extrapolated and applied to a similar delegation. Whereas now there's just so many variations and so much inconsistency that's harder to do and creates more uncertainty as to the scope of the delegation.
And it's going to be interesting to see if this elevates the importance of legislative history, right? In the sense of, as we talked about earlier, like focusing on what is the purpose of the section. Well, we're going to have what's officially on record, and a lot of people do those speeches on the floors, and we look past them, right? But there now might be even heightened importance, and then there's going to be what is the committee reports, and as we know, for many bills, there's just not committee reports, and so now is Congress going to be aware of Loper Bright and say, oh, okay, because of this, I now need to be more aware of what's going to happen, and so as a result, we're going to actually have the committee reports, in part to help formulate what the agency should be doing, but also showing what should we be doing from okay, we want to make sure that anything they do is going to be okay.
Yeah, so Kevin, your point is very important in the tax area, because a lot of the delegations do have something to the effect of promulgating rules that are needed for to carry out the purpose of the statute, and so that does highlight purpose. So now now there's actually a statutory tie-in to trying to understand the purpose of the statute, which is different than just normal statutory interpretation, where it's debatable whether or not you look to legislative history. But here, the Congress is actually saying you need to look to purpose, or at least that's one way to look at it.
But Congress, not that Congress can even fund the government, but if they could, assume away the split we have, could Congress fix this problem for tax regulations? Could they do something to 7805A to say we want tax regulations to be, more like Chevron if they wanted?
Yeah, so I think Congress could do a number of things to resolve the issue. Number one, they could modify the APA, which would completely change things. Number two, in the tax area, they could, redo a grant of authority like 7805, but more strongly worded, giving the secretary some clear authority to issue legislative regulations, not just for the enforcement of the code, but anything for the implementation
for the purposes of each section or something. Lab. I have a feeling there'll be a number of taxpayers who would be against such a proposed.
Yeah, I think you're right.
Guys, is my audio working? I'm not sure what happened, but I would love to show real quick. I think I can still get the point of this in very quickly. It's a very quick, easy demo. So if we want to hand the screen share back over, I'd love to get in there and show you exactly how the way we've structured Answer Connect can really help you as you're working through these types of topics. So I'm going to go ahead, get the screen share going here. Appreciate you working through the technical challenges that I was working through, and we will jump in here real quick. So one of the key ways that we've organized Answer Connect is around this concept of just these federal tax topics. So when you're inside of Answer Connect, which is where I'm at right now, you can go into a particular topic. And these are really meant to be these topics. You can kind of think of them as all the different types of work that people do in the accounting and the tax world on a regular basis. And what we do here at Wolters Kluwer is we actually will take a variety of different basically sources and put together guides that talk specifically about a particular topic. So if I wanted to look up, say, transfer pricing, because this is an area that might come under more scrutiny now that we're in a post-Loper Bright world, you can go into the topic like transfer pricing for intangibles. And the way that we've written these articles is we actually kind of give you a general overview of what this topic means, but more importantly, we cite our primary sources in here. So if I go and click on this key primary sources link, what you'll see is that this overall topic of the transfer pricing of intangibles, we actually organize, what exact text of laws is this coming from? So in this case, it's coming from Section 482. We also specifically call out which internal revenue regulations or IRC regulations are going to basically be governing this particular topic. And we also have links to the court cases that are currently out there or have been out there as well. So it's very easy for you to come into a particular topic and then segregate your research into enacted law, text of the law, the regulations, as well as any court cases that are out there. And then beyond that, it's very easy for you, if you do want to click into the actual text of the law, you can easily click into basically our code view of this particular topic, and it's going to pull up, in this case, Section 482, and it will also give you a 360-degree view of this particular code section. Now that you're in the context of Section 482, what does the actual text say? What is the history of this particular statute? What are the committee reports that kind of went into the construction of this final statute? As well as what are the regulations that are attached to this, our editorial explanations, and then also the cases and guidance that are out there as well. So it's very easy for you to get that full 360-degree view of a particular, both a topic, and then once you've used the topic to kind of find what the core text of the law is, you can go into this 360 view for the code sections, and then also take a look at all of the different code sections, regulations, court cases, and other administrative guidance that's been provided. And you can see all of that information all in a single 360 view. So it's very easy for you to understand and maybe make your case based on, do you want to make a case primarily based on just the text of the law? Do you want to see what the regulations are? Do you want to see what the different court cases have been and what those outcomes have been? All of that information very quickly and very easily accessible here in Answer Connect. And then what's also nice, if I kind of click into the other related topics real quick, as I kind of click into the controlled foreign corporation topic, because that's similarly related to transfer pricing for intangibles, and we go down and we look at the key primary sources in there, you can actually see that for some topics, we'll actually draw from many sections of the Internal Revenue Code to kind of talk about why we're doing what we're doing in practice today. And again, this is all segmented based on the key code sections that this topic is coming from, as well as what are the regulations that are out there that are governing this particular topic. So in a Loper Bright world, if you want to come into a topic and look up and see, hey, what is the general approach taken for this topic right now, and then what part of that approach is supported by the actual enacted law, and what part of that approach is actually supported by the regulations. Very easy to come into Answer Connect and do that sort of a quick high-level analysis of really any topic that exists inside of our federal topics list, which is a very expansive list overall. So this is one of the key benefits of Answer Connect, is pretty much any topic that you can think of under the sun. You can come into Answer Connect, quickly drive into what are the primary sources that are kind of supporting these positions on that topic, and then segregate those and segment those between enacted law, what's the support for that, as well as what's the support under the IRS regulations on that particular topic. So that's how Answer Connect can help you in a Loper Bright world. Again, thank you for the time today, and I can hand it back off to Margaret so she can close us out.
Thank you so much, Nate. Thank you to all our speakers as well as our attendees, and we thank you for sticking around for this demo. I'm going to launch our final polling question. And as a reminder, CPE credit will be posted within 2 to 4 business days. You will receive an email with a link to the course evaluation as well as your certificate of completion. Today's webinar has also been recorded, and you will receive an email with access to the link within 24 hours. We thank you for attending, and I hope you have a good day.